Good morning, team. Today I want to present my trade on Rocket Labs RKLB. This was an opening drive fresh news trade. Big picture wise, as you can see, the SPY finally broke a trend line on the high time frame a few days ago, and we've seen some selling pressure introduced into the market since then. After capitulating to the 430 level, we continued to be bought up at this level, showing some signs of strength and support here. Unless we see a significant negative catalyst, we may see some more upside expanding back to the top of the range without the significant introduction of a negative catalyst, as pointed out by Steve Spencer in the AM meeting. Additionally, VIX, you can see, has expanded in previous days up to the 25 as high as 29 range, given some uncertainty in Congress regarding the debt ceiling. In the last day or two, we've actually passed legislation to increase the debt limit, providing more certainty to the market and deflating VIX, expanding back to the lower part of the range, opening the day yesterday around 20 and closing around 19.5. VIX above 25 or expanding to the top of the range would tend to lend us to look for more market plays with overall market drivers, with underlying equities being the vehicle to exercise those ideas. Similarly, in the Qs, behaving very, very similarly to the SPY, we've got our 355 level that continues to be bought up. So again, we may see range expansion to the upside without significant introduction of a negative catalyst over the coming days or weeks. So the specific independent catalyst here for Rocket Labs, similar to PLTR the previous day, and similar in timing of the catalyst and texture of the catalyst in the previous day regarding PLTR, Rocket Labs also won a contract, a government contract with NASA, to fly an experimental solar sail into space. This led to a significant gap up as soon as this announcement was made after the close, leading into the after hours, but selling significantly into the pre-market the next day. As you can see, we've got this huge wick on the 60-minute leading to selling into the open, creating a significant downtrend where sellers are clearly in control. Going into the trade, I was extremely short biased and didn't want to take the trade long because of this selling pressure. I realized it was going to take a lot of volume and a lot of bids stepping up to change the downward momentum of this selling pressure. Of note here is the ATR 1.54, very low institutional ownership 1.8%, market cap 6.33 billion, 40 million shares outstanding. Relative volume into the trade was around 2, elevating to 2.5 throughout the day. Again here, the technical analysis on Rocket Labs, we can see the huge gap up after the announcement. Selling pressure leading into the open. And further capitulation. We can see that in early September, on a huge volume day, we led to a spike as high as 21.5. Since then, the ticker has experienced significant selling pressure. The NASA contract, as can be seen here by this small wick on the most recent day, only brought us to 16. And then we sold off continually from there. So not only has the selling pressure been in the previous day, but we've seen the selling pressure since this big introduction of volume in early September, and we've not been able to reach these levels. Again, even on the positive news catalyst with the NASA contract, we were only able to push the price up momentarily before leading to additional selling pressure. For all these reasons, I was looking to play this ticker short, given volume and VPA and tape considerations, using VWAP as my critical level to play from and clear risk level. Here's a clearer picture on the 15-minute chart leading into the open. Again, huge move up, can't hold it all, an immediate capitulation with sellers taking control, creating a lot of momentum to the downside, with consolidation leading into the open. A few things I want to point out here. With the consolidation leading into the open, this ticker really could have gone either way. What ended up happening is another liquidity grab to the upside, meaning the big players were squeezing the last bit of juice out of the orange, selling at the highest prices they could, before eventually moving the ticker down the rest of the day and even further after the close. We're going to talk about the optimal entries at the end of the slideshow, but I was very wary of these levels at the beginning of the day, and to take this entry involved clear rejection of this pre-market high regarding this range set leading into the open, taking into consideration the pre-market low, this yellow line, and the previous daily levels. On the open, we saw the pre-market high being tested, and we'll talk about this more in the trade management slide. But on the open, we saw the pre-market high tested and rejected. As you can see here, 1, 2, 3, 4 times in the first 4 minutes, with the texture of the tape changing considerably, with large prints. Here we have a time in sales of greater than 1,000 shares, paying the ask, these green prints, with the edge leading the action. Our level 2 shows larger orders unable to fill at 1534 several times in the first few minutes, with the edge lifting this 1538 order before capitulation to the downside to the pre-market low, this yellow line here, and moving further to these previous daily levels, as we'll see on the trade management slide. So again, with all of the considerations discussed, after testing the pre-market high several times with a clear read on the tape, a short entry was made targeting these pre-market lows for partialing with previous daily levels, for additional partialing, saving a few shares for the longer term move, and potentially adding back into the trade should opportunities present themselves. The level to risk from was the pre-market high, or a few cents above at the body of this candle in the initial minute. What we're also seeing here is volume profile pushing the stock down, sellers piling on, and really testing this previous daily level at 1465. At this point, I'm all out of about 80% of the position, leaving the last bit for a potential move lower, which we did see at the end of the day. However, this volume introduction, which we'll talk about in the optimal trade management slide, along with this wedge around VWAP, with the price action getting tighter led to a very nice risk-reward opportunity to the upside, with several possible entries, either break of the wedge or break of the pre-market high, or even high of the day, which we'll talk about in a moment. So again, although I took the short here in the 4th minute based on a clear rejection of the pre-market highs and a clear tape read, getting all out at the break of the pre-market low and the test of the previous daily level, this blue line, there were better shorts at 1580, which represented clear key levels established during the pre-market, as can be seen by this blue line leading into the open. Once these 1580 levels were tested on significant volume here at around 1017, this could be read as some exhausting volume. We capitulated the rest of the day, and after the close, never getting near these levels again. This volume at 10:01, 3 huge massive volume bars, around 1 million shares done in 5 minutes. In magnitude, these volume bars are very significant and robust compared to the volume we saw at the open, along with very tight price action, wedging around VWAP, making higher lows on the low time frame into the wedge, break, leading to probably the best entry of the day on this ticker. This is the entry that I missed, but was taken by several teammates in the Discord. Overall trade review. I was happy with my approach. I really appreciated the fact that I did get a clear tape read and was patient in the first few minutes before making my entry. I had a clear level to risk from. I liked the rejection of the pre-market high. I liked playing with the trend and playing in stream with the selling pressure going down, leading into the open, pushing price action to the downside, testing the range set in the pre-market between the pre-market high and the pre-market low, taking off of my position with quick profit taking at the open. We had an ATR of 1.25, so that was considering that as well. So we only moved around, let's call it 25% of an ATR before rebounding, retracing back to VWAP, wedging, and then moving back up to these highs of 1580, which were key on the higher time frame. And from the high of the day to where we ended in the after hours, we were well over an ATR move down into the low 14s again. Lessons learned. Patience is something that I did well in on this trade. I took profits quickly at the open. After the first 15 to 30 minutes, I'm more likely to hold longer and be more patient with the price action to allow the trade to work after discovery. I should have been quicker to react on this volume. I should have been quicker to see this tightening of price action. And I should have been more open-minded to the long as we liquidity grab to the top side before further capitulation down. For brevity, I'm just going to end the playbook review here, and I'm hoping to do these more often just to add some more insight and nuance while presenting the playbook with voice in the next few. Just want to see how this goes and appreciate you all listening, and let me know if you have any feedback and how we can make these better. I hope they get better each time we do it. Thanks, team. See you guys.